Plotting PD arrays 101. Welcome back to the Daily Nugget. It's day 101 of 365. Let's take a look at pound USD. So we start by plotting our monthly premium and discount levels, which shows us that price is trading near equilibrium but in a premium. And so depending on low time frame price action, I may not be thinking sell yet. My mind says potential to sell, but could be hitting higher in the short term. And so by process of elimination, we'll mark out our key indicator areas, which I love about this concept. And because we're above equilibrium, technically a premium, we're looking to identify where price may sell off. So from that equilibrium level, we look first for bearish breaker blocks, and then fair value gaps, order block, and then any old highs and lows. And kind of just as a side note, when you see a large monthly candle like that, it was likely caused by a fundamental factor, and so it's more of an anomaly that will kind of distort your perception of the market if you put too much significance on it. And so basically ignore it if you can determine why something like that formed. And in this case, it was in March 2020, so that was around the COVID crash. And so I'm kind of just initially marking out everything that's relevant at this point to train my eye to see some of these things. Then you can kind of just start taking out whatever's not relevant. So obviously price is broken out of this breaker block, so I can take that out. We've cleared this fair value gap, so I can take that out. The reason I've opted for this order block instead of this one here, because there were two in the area. This one's kind of been untested. We came very close and price sold off. And there is another one further up here, but until we break through here, I think it'll just clutter the chart, so I'll leave it out. So we have a potential area we could sell off from, and now drop down to the daily and repeat the process. What I'm noticing is sometimes you will use discretion where this fair value gap is above an order block, but just because obviously the concept says look for these, in this order, it doesn't mean if one forms above the other, the market can't react from there. The daily aligns quite nicely with the monthly, and I like that we actually spent a bit of time in this monthly order block. We mitigated it initially here, didn't pull away impulsively. We kind of corrected, got that internal time-based liquidity sweep, and then we really pushed lower, and then now we've almost seen a correction back up into that area where we did come into the fair value gap that formed on that initial displacement down, and the market's kind of reacted. With tariffs and everything and all these fundamental factors going on, the technicals have aligned really nicely here and positioned us for a short, indicating that, the monthly area is held. We formed a daily level as the monthly level held, and now we've tested that daily level and price is coming lower. So I'll ideally look to position myself short on pound USD after probably a bit of a correction higher. That's looking quite nice to sell off. So this was one example, and I'll be testing this across all the pairs in my watch list, just for a better indication of what works and what doesn't. Make sure you do the same if you're looking to apply this or any concept you kind of see on my channel or anything online really. Remember guys, consistency is the choice you make when you start doing the things you should be doing day in and day out.